Welcome to the fifth episode of School of Thought, presented by HP and Global Tech Advocates. During this session, panelists discuss acceleration of cloud adoption in financial services. And now, your moderator for the series, founder of Global Tech Advocates, Russ Shaw.
My name is Russ Shaw, and welcome to this webcast in a new series from HP and Global Tech Advocates called School of Thought, Managing Change in the Age of Hyperacceleration. I'm the founder of Global Tech Advocates, an international grassroots tech community representing networks of entrepreneurs, investors, experts, and tech leaders in more than 20 tech hubs and regions around the world. Global Tech Advocates has partnered with HP, one of the world's most respected and influential technology companies, to enable peer-to-peer learning across an international community of IT leaders. Now, over the last few months, Global Tech Advocates and HP have conducted a series of in-depth interviews with a number of large and mid-sized companies across multiple sectors and multiple geographies. We've been speaking to CTOs, CIOs, and tech leaders who are all on the front line of dramatic change and disruption caused by the global health pandemic. Now, the common theme that has emerged from virtually all of these discussions has been around the hyperacceleration of digital transformation. One global business told us digital transformation that would usually take 5 years has been completed in 2 weeks. Now, through this webcast series, we want to share insights from IT leaders about this age of hyperacceleration, looking at the trends impacting all of us, and looking at the sectors that are experiencing some of the most dramatic changes. This webcast will focus on the acceleration of cloud adoption in financial services during the pandemic. In recent years, financial technology, or as we call it, Fintech, has been a real success story of the digital economy across the UK and Europe, Asia, and North America. And around the world, technology-driven solutions have been challenging incumbent banks and financial services providers extensively. The customer-first approach, mobile functionality, advanced user interfaces, tools for managing cash flow, and accessing additional capital at speed have all well and truly come into their own since the pandemic struck. The traditional financial services players have followed to close the gap on their nimbler, smaller, tech-enabled counterparts. And in many cases, lockdown has accelerated trends towards greater adoption of cloud technology and engagement of customers through digital and mobile channels. Yet, there are questions for both the old and the new. Does the current regulatory environment in financial services hinder their modernization? Where are we with transforming legacy infrastructure in the banks? And what will be the lasting long-term impacts of this pandemic on the rise of fintech? Now, to discuss these questions and many others, I am delighted to introduce a first-class panel of financial IT experts. Charlotte Crosswell is the CEO of Innovate Finance, an independent industry body representing the global fintech community. Patrick Mays is the global head of bank user solutions at Credit Suisse and focuses on the transformation of its technology function into a hybrid provider of integrated services. And Mike Giannoumis is the senior vice president of IT at PaySafe, a Canadian-based multinational online payments company. Now, before we ask this panel about what has been a truly transformative year for financial services, I'd like to introduce Joe Wagle, a key member of HP's managed services organization, who's driving its worldwide solutions consulting strategy. And Joe will also be our HP host for this webinar. So, Joe, I'd like to start with your views on the acceleration of key trends within financial services, and specifically, what HP services have been most in demand, and what have you seen from your customers?
It's a great question, Russ, and thank you for inviting me here today with this great panel. So, as you mentioned earlier, what we're seeing in the banking space and in financial services generally is a great acceleration of the pace of change. Technology's taken an even more prominent role. Before this pandemic, it was already very prominent in the way that banks differentiate and build their businesses. But now it's become absolutely existential for them. They have to, as you mentioned earlier, use technology to keep the business going. But what we're seeing now is that banks are embracing the opportunity to create even greater trust in their clients and open up new opportunities to offer more services to their clients. They're also watching closely to see how is the culture changing? What is this pandemic doing to the way people want to interact with banks, the products they want, the channels they want to use, et cetera. And then they're also taking advantage, again, they're moving agilely to take advantage of some of the cost benefits of this new model and the model that we're entering into during the pandemic. So as a result of those changes and many others, including security and compliance challenges brought by those, the changes of the pandemic, we're seeing a lot of growth in managed services over the cloud. Anything that we can do that allows for greater flexibility, better speed of implementation, and better customization is absolutely being required. So if you look at our managed services for PCs and printers, using cloud technology to implement and maintain those endpoint devices is absolutely critical. As I alluded to, security is incredibly important right now, especially as our banking clients have moved to a model where they're able to exist and in fact grow in this new model. Not knowing what the future may bring, but they're able to exist and speed up their transformation in this new model. There are still security challenges. There are still things that are question marks as far as what is the best way to secure in this new model. And so our security services and security offerings are incredibly important to our clients right now. They've never been more important as they struggle to maintain governance and control over lots of data, most of which is privileged and private. So security is obviously a huge area for us as well in our client base. And then finally, the third thing that we're being asked to do is help with digitization, right? Digitization isn't something that we're seeing one part of the bank focused on. It's across everything from business to IT, throughout the leadership of our banking clients. So looking at how does a process work ideally, how does it work today during the pandemic, and how do you want it to work in the future? Providing assessment services and the capability to embrace the current need, but also chart a course for a more digital, more connected, more flexible and reliable set of processes going forward. Having people out of the office uniformly, very abruptly like this has created a great opportunity for banks to digitize and create even more efficiencies. And a lot of our banking clients are looking to HP to help them with that journey.
That's great, Joe. Thanks for that. And thanks for setting the scene with us in terms of where we're headed over the next several minutes with this webcast. Now, what I'd like to do is bring in the panel and start with a broad question about what everyday life has been like in their various organizations. And Charlotte, I'd like to start with you, and then I'm going to bring in Patrick and then Mike. So Charlotte, how has the pandemic changed the way Innovate Finance operates and interacts with its members?
Yeah, and it's a great question because we're now nearly 6 months into this, and I think we forget what this was like 6 months ago. So when we were first looking at a lockdown, as you will probably know, we were about to host IFGS, which is the Innovate Finance Global Summit, which is one of the preeminent fintech conferences around the world. That attracts 50 countries coming into the UK, and it seemed such a hard decision to potentially put those plans on hold. But obviously, as time, I think we were about a month out. It was mid-April, the conference, and of course, by the time we got to mid-April, that seemed to have been the easiest decision we made. And instead, the team themselves moved that to virtual. And what now we look back at that and say, God, what an incredible feat that was. 300 speaker faculty, you're moving to a virtual conference, probably one of the first that had done that. And we had a slight advantage that we had all these speakers, we had all the topics, and we just had to sort of do a little bit of jiggling around. I'm not sure the team probably would say it was a little bit of jiggling. It was a lot of late nights. But the great thing was, and that just shows you fintech and globalization and how people are willing to transform, is no one at the time was looking at online webinars. No one was really sitting there, thinking you're bombarded in their inbox by how many you could see every day. So we had an amazing audience dialed in for that first 3 weeks, and I think a real desire, as Joe was saying, to really look at the impact of digitization transformation. As you said, some of those big financial services players were already accelerating their plans, and everyone wanted to understand what everyone else was doing. So that was such an easy decision, really. Fintech in itself is incredibly nimble. It's fast. It's easy. It's able to transform. So I would say that our members didn't go through a huge journey. They didn't have call centers to move out. They were able to really amplify what they were doing and move forward. And as the acceleration of banking and digitization has just been incredible. But it's been a sector that has pivoted, transformed, and changed so fast. While others really have taken that for the last few months to catch up, I would say the members themselves, really led the way in those early few weeks.
That's great, Charlotte. Thank you. And I have to say, you're being very understated in terms of the heroics involved in doing what you did with the Innovate Finance Global Summit. Literally from lockdown to having that summit, it was probably about 3 weeks. And you moved that all online incredibly well, incredibly successfully. So kudos to you and your team. And you set the benchmark for many other organizations out there who were also panicking about what to do. So thanks for that. Patrick, Credit Suisse is one of the largest financial services organizations and businesses in the world. Can you talk to us a little bit about how you've had to adapt and also change during the pandemic?
Yeah. Okay. Thank you. Look, there was a response to the pandemic. In fact, our response already started early January because we're a global bank. So we were dealing with split working in Asia from January, February, where we learned a lot of lessons that we then also could implement in Europe and North America and South America. Credit Suisse has invested in the past quite a lot in remote working capabilities. So we have policies, people can work from home. We have VDI solutions, Citrix solutions. We also have invested quite a lot in cognitive capabilities to support, to provide support, which was very helpful in the pandemic. So all the infrastructure components were there that allowed us to move 75,000 employees and partners to full remote working. Yeah, and that was pretty successful. But the model that we had in place, which was primarily on-prem model, is a model where it was audio first, and the typical engagement model was one-to-one. And with the pandemic, we learned that the world has moved on to video first, and it's many-to-many. And therefore, the acceleration of new collaboration capabilities in the cloud became very important. And we were rolling out these capabilities, by the way, but the COVID-19 has certainly accelerated that cloud adoption in the collaboration, communication, and productivity space.
That's great. Thank you. And obviously moving 75,000 people from an office space to remote working is absolutely incredible. So well done to you and your colleagues. Mike, let me bring you in. I want to get a sense of how the pandemic has really impacted the payment space. We hear a lot about people really embracing digital payments technology during the past few months. Can you give us a sense of that and the technological solutions now available?
Yeah, sure, for sure, Russ. So I think, with respects to our consumers and merchants, we initially witnessed a huge drop in what would be considered card present type of payments or in-store payments, and in parallel, almost a doubling of e-commerce related or online payments. We've seen the shift of people moving away from cash and moving towards cashless or tap paying and mobile payments, those types of things. So those were already trends, but they're real now. And I think the reality is there's no going back, right? I think what we're starting to witness is those networks and those channels are becoming more and more prominent in our space.
Oh, really good. And doubling of payment volume, I think for any organization is pretty monumental especially from a capacity point of view. So I sense you're on the cusp of some of these very interesting trends that we're all starting to experience. Joe, let me come back and bring you in. And we understand that financial services had to adapt during the pandemic for compliance requirements. How has this evolved during the pandemic? Can you give us a bit more of a flavor on that, please?
Yeah, sure. I mean, we talk about the rapid acceleration of digitization and the embracing of these of digital tools and processes. Also incredible growth in automation as well. As we look at how our banking clients maintain compliance in a situation that's changing so radically and so quickly, they've had to depend more and more on electronic documentation, whether it's records keeping, transaction histories, private client information. They've had to use the attendant digital technologies because there just wasn't a way to keep those some of that documentation safe the old way. And so what we found is that there's one of the fastest areas of change is how do we maintain our compliance status? We have to rewrite our book of standards and practices. We have to be able to use this new model as a way to, improve the way we do business, which includes our compliance stature. So what we've seen is a willingness to roll up the sleeves and rewrite the books on how do we maintain compliance for a given type of financial business. And we've seen great results where people realize that, wow, we can save even more than we thought we could because we didn't realize how much record keeping for this process was costing us. And now that we're forced to do it remotely using digital tools, the business case is even better for digitization. Good thing we had to do it was one of the responses that we got. So I would say that just like the processes themselves, the rules banks keep around maintaining compliance are changing too. The rules haven't changed, by the way, and they still maintain compliance, but they're willing to try new things, and it's really getting some results.
That's good. That's encouraging given the challenges that many financial services organizations are facing. Let's move on to the next theme I want to cover, which is really about some of the macro trends that you're all facing and experiencing, and broadly looking at some of the long-term implications of the pandemic on the financial services sector. So, Mike, I want to come back to you first now because I want to pick up on some of the things you spoke about previously. Give us a sense of how you think the pandemic is really going to accelerate some of the trends. You spoke a little bit earlier about digital payments. What are some of the things that you're seeing that's going to really have this long-term impact? I know you said, the world as we know it no longer exists. Go into that a little bit more, please.
Well, we're certainly seeing what Joe mentioned, a lot more automation. I think there's a lot more openness to embrace AI and leveraging the Internet of Things. At the same time, this introduces a huge security risk and a challenge for IT departments and professionals in that space because the phishing attacks have been elevated. The end point security challenges have just been increasing exponentially. So, I think one of the areas that certainly is a focus point for us is a lot more increased automation. We're seeing it from call centers to the way we interact with merchants, the way we interact with end consumers. We're almost going back to this feeling of now I have this personalized service. So when an individual actually reaches out, they are getting the attention. They're not waiting in a queue for a few minutes. They're not waiting in a queue for 3/4 of an hour. They're getting addressed immediately. They're getting to where they want to go. So this has been a huge change.
Right. Thank you. Charlotte, Innovate Finance, I know, has just co-authored a very influential report on the future of finance in the UK, alongside the Scale Up Institute. Is access to investment a major concern for fintechs during the pandemic, and could it harm its evolution?
The problem we always have when you put a survey out especially on capital, is you're looking at a moment in time. So in some ways, when we put one of our initial surveys out, and it was over 70% of the companies surveyed, and we had really great response to that. But over 70% were concerned about the next round of capital, and a lot of that was obviously the smaller companies really looking at Series A. I think we have to admit that's probably not totally surprising. So the company's already VC backed, or Series A, Series B, going to raise another round. We're already in touch with international investors. And in many cases, we're in touch with investors that were looking to invest this year. And so we've seen some really huge rounds being raised during the crisis. And that was actually a trend that had started last year as well. Sizes of checks were going up, but numbers of checks being written were going down. But it is a huge concern that some of this great technology that maybe has been bootstrapped by founders, has been going for 3 to 5 years, is about to do a Series A, and about to go on the road, and hasn't been able to meet with those investors during the crisis. Where's that capital going to come from? And that's not technology we want to lose, because actually, we've seen some great innovation, some great products out there, but it's just the start of the journey. And this digital transformation we're going through is only accelerating that, and there's still quite a lot to be done. So it's certainly something that we co-authored that report, was looking at where the growth capital gap was prior to the crisis and what's been accelerated during the crisis as well. It's a sizable number. And that's something from family offices and individual investors all the way through to the lack of maybe patient capital, institutional investment that certainly we see here in the UK. The UK's fintech scene generally has about 50% of overseas investment. And in many cases, those VCs have wanted to have face-to-face meetings in the past and are going to have to get used to that new normal of how to transact an investment without ever meeting the founder and CEO face-to-face. We're starting to see that now, which is encouraging. But for many smaller fintechs, that is a concern. It is a bit of a race against time, and they have taken advantage of different government schemes, furlough schemes, short-term loans, just to tide them over. And some of those have had to put on hold some of their expansion plans at a time where large financial services players across the world have obviously been looking to for those products and for that acceleration. So I think we're doing a lot of work with with some of the government departments, with the investment firms, to really see how we can play that role of bringing them together and ensuring we don't lose a decade of innovation that we've seen since the last financial crisis just because of a lack of capital.
Okay, really good. Thank you. And Patrick, what are the main changes you think the traditional financial services sector will make or will need to make in the wake of COVID-19? What's on your radar?
Yeah, I think it's not specifically COVID-19. COVID-19 is an accelerator of a transformation that always happening for many years. But typically banks are omni players. They try to be a platform player. They try to connect with Fintech. They try to do wealth management. I think that differentiation needs to happen. I think digitization starts with defining a very clear business strategy. I don't think that most financial services companies can be all three. You're either a platform player in the payment space, or you are an ecosystem player where you try to combine financial services with other services. I know, for instance, banks who are not offering a mortgage package, but they're offering a full home ownership package. USAA in the US is an example of that. Or you're an intelligent bank, what I call an intelligent bank, which provides, a very I would say, sophisticated advice for specific needs, for complex needs, for instance, in the wealth management space. I think all three require significant investment. And I don't think that you can be all three at the same time. You need to choose a certain strategy and then go for it. And that will, I think that differentiation will happen in the financial service sector. Yeah.
Right. Thank you. Let me move on to the next theme. And basically, if you look at the last few months, we all have seen how the world of work has changed forever, with remote working and collaborative tools really set to be permanent features for many, many businesses. So I'd like to just dig in and ask each of you a little bit more about the future of work as it relates to financial services. So Mike, starting with you, what role is technology playing in safely returning your staff to work?
It's a great question, Russ. We're actually working on, and there are several working groups within PaySafe where we are focused on this return to work. Right now, beyond shipping technology to individuals' homes, like I mentioned earlier, securing the endpoints and doing extensive phishing and security training, there's not much really we can do. We're in a time right now where we're trying to figure out, do we really need to return everyone to back to the office? Is the current office as we know it necessary for every role? And especially in our distributed model, do we really need all of those locations and all of those um, um, offices? The entire way, or the entire way we used to attract people with respects to, I don't know, free lunches and coffees and that sort of thing has completely changed. So I think we've proven that we're quite effective working remotely. Projects are being delivered, budgets and objectives are being hit. So it's a big question mark right now. It's a really large contemplation point.
Okay, good. So a bit of a question still, but some activities underway. Charlotte, do smaller startups and scale-ups actually have an advantage in what we're all describing as this new normal, or have the larger players caught up with this notion of remote working and how to make it work effectively?
Yeah, I think the ability to make quick decisions, has been done by fintechs, and with maybe a smaller amount of people needing to be involved. For someone who's sold into banks in the past, I'm not sure necessarily there's a lot less signatures needed to onboard new technology. So there is that advantage. I think we're in a real pivot at the moment. Obviously, going into the winter as well. And especially living in a city like London, where most people get around by tube. Is incredibly challenging because there is a real reluctance to get back on that tube at rush hour. Interestingly, when I was talking to companies outside of London who are starting to go back into the office, socially distanced, etc., they've said how much they've realised they've missed being together. Just being able to strategize, brainstorm, and it's interesting, isn't it, when we look at our 30-minute Zoom meetings that we all now have, and we feel so happy that we've managed to cut those down from an hour plus travel time. So maybe a 30-minute meeting sort of replaces an hour and a half, including travel time. But actually, the chit chat you see as you go back out to the elevator, the quick sort of brainstorm with the team. We are missing that, and that's really hard to do over Zoom and replace it. So I strongly believe we're going to see a hybrid. I think people have realised that you do not need to commute at rush hour anymore 5 days a week. But actually finding something where maybe you can go in 2 days a week to meet some of your team members. And actually get together will probably be what people want. And the commute down the stairs for me, it's great, but do I want to sit there and sit in my lounge for the rest of my career? No, I don't. I certainly don't want to be a teacher and homeschool my child for much longer. So I'm counting down the days till next week. But I think finding that balance where we get off the rat run, but also recognise that just doing back-to-back Zoom meetings for 30 minutes, all day long, is not actually a productive way of working. Productive way of working is finding that balance, is having the time out. And it's something we're very conscious of, is actually booking out that space which says keep free, and finding that time to reply to an email, pick up a phone call, have a chit chat, and maybe do a phone call instead of a Zoom call, and shake it up a bit, I think, is the way forward. And, and if we can get some of the team back together and having, sort of brainstorm, I think, that would be a great balance to have.
Okay,
Fingers
thanks.
crossed.
Yes. Patrick, Mike spoke a bit earlier about automation. Charlotte just brought in the notion of hybrid working environments. Maybe a broad question for you. Are there areas where financial services, in terms of how we traditionally think of them, that will need to remain in person? And if so, what are those specific areas in your view?
Yeah, I completely, by the way, I completely agree with Charlotte. It means that the world will be a hybrid. And applying that on financial services, look, if the deal is important, for instance, investment banking deal or wealth management for a family office, people wants to see each other in the eye. The relationship building needs to happen, and it's very difficult to do that in a virtual world. And the second, I think any deal that needs to be concluded, important deal, will happen in the physical world. So I think the world will be hybrid. We will probably spend less time traveling around, meeting people while we preparing deals, so preparing transactions. But it's, by the way, the same for employee-to-employee relationships, not only employee-to-client. But I think the initiation and the conclusion of any important transaction, there needs to be some physical or human aspect.
Okay, thank you. Let me now turn to the theme around employee engagement and considering areas like employee well-being as well as diversity and inclusion. And we know that both the technology and the financial services sector still suffer with problems relating to underrepresentation of various communities. And there are, of course, now fears that with firms going into more of a recovery mode, we might even end up further losing ground, particularly as it relates to diversity and inclusion. So Charlotte, let me start with you. How do you manage diversity, inclusion, and well-being amidst the pandemic at Innovate Finance?
I think that's a great question because we had a very active Women in Fintech program, and a lot of that really helped by getting together. And this is where you meet those physical meetups. You can do that in a Zoom call, but it's really hard to sit there and bring that support function there. I think in terms of the team and well-being, we've actually kept an eye doing surveys, making sure people are feeling that they're getting support. If people want support for mental health issues, for example, making sure that they can ask for that and call that out, even if it's anonymous, so we know we have issues there. And interestingly, obviously, we've had the Black Lives Matter, huge transformation going on around the world, and that's something we are actually prioritizing through this pandemic. So we don't want to wait to get back into the office. That's something that we want to put out there and work with firms around the world. In some ways, being able to share that globally without having to rely on physical meetups has been an incredible advantage. But I think it's something we really have to focus on. It would be really easy to sit there and put diversity and inclusion on the back burner and saying that that's not a priority. It's absolutely a priority, and it is concerning when we're reading up articles where people believe that we're going to go backwards. That more women will have to default to being homeschoolers. You will have to sit there and finding it too challenging to juggle both home and work life. So we've made some great progress. It's not been enough. Certainly in terms of racial diversity, it's pretty shockingly bad across financial services. And I think we really have to take that space and say, look, how do we continue to push this forward? We've started that journey with gender diversity. We're not there yet, but it's made some progress in FS and tech. But let's not go backwards. Let's go and look what great looks like, not just what good looks like, but what great looks like, and use this opportunity of us sitting, in the comfort of our own homes to really focus on this and and share those global learnings. Such an important topic.
Thanks, Charlotte. Thank you. Patrick, let me bring you in on this point. How do you ensure the health, the safety, the well-being of your staff at Credit Suisse?
Yeah, so let me start by explaining COVID and post-COVID situation, because I read articles where people saying, there's no need anymore in campuses and we're going to make enormous economies by having people constantly working from home. We need to realize that most people were working from home because governments were telling them to work from home. If we go to a post-COVID situation where people are choosing to work from home, as we do at Credit Suisse, there's a number of aspects that we need to take into account, which makes that remote working feasible. I'm talking about ergonomics. For instance, you can have a laptop or you can have your BYOD and have a Citrix connection, but do you have a proper desk? Do you have ergonomic chairs? Do you have proper displays? And we looked into that at Credit Suisse quite in detail, and we came to the conclusion that we were going to offer these additional infrastructure to basically enable people to be set up from home in the same way they would be in the campus. The second thing is I think the mental aspects in terms of connectivity, because I felt in the COVID period that the need to connect with your team was even higher than before, and having constant connectivity and sharing experiences how you deal with this situation is extremely important. So it's a very complex matter, and I don't think any company has already a model of, I would say, the future of work. We have a program within the bank that is basically working on what is the future of work going to be. But we need to be very cognizant that this is not just about having remote capability and having Zoom and having email access. It's a very complex matter. And personally, if we want to that's my personal opinion, if we think about that hybrid model, whatever model that is, from 100 to 0 or from 80 to 20, remote working versus on-prem, I don't think if we really want to do it properly, there will be large economies, because the money, the capital that we will probably economize on real estate footprint will be required to reinvest in technology and other things. But it's an important topic, yeah, absolutely.
Yeah, that point about reinvestment, I think, is a really critical one. That obviously I've heard from you before, but I've heard from many others as well. So be interesting to see how that drives some of our thinking going forward. Mike, are there new considerations for technology businesses when it comes to the well-being of staff, especially with this increased level of home working?
Well, I think, like Patrick just mentioned, the one of the most important things is the entire mental health of an individual, right? And I think it's uh, currently underestimated, the impact of uh, we don't really think about it, but in many cases, there's individuals that are alone in a very small apartment, don't have access to others, don't have a large enough space, and now they're cramming their workspace into that small space. So, we do several things. I believe Charlotte mentioned those back-to-back Zoom days are not productive. We have no video days or no meeting days that are built into our schedules. We are doing weekly. We were doing weekly, and I think it was kind of survey overkill. Doing weekly well-being surveys. Now we have, yoga once a week, virtual yoga. We have, I hosted a happy hour from my kitchen, and we had, this 4 p.m. to 6 p.m. drinking, just casually, just talking and socializing. We have this need to, despite the type of company, technology or otherwise, to connect, and individuals have a need to connect. So I think we're doing whatever we can with respects to leveraging collaboration tools, leveraging all of these additional survey kind of tools, but at the same time, it doesn't replace that human contact. So it's a tough one. We're still working on it.
All right, a work in progress. Right. Joe, I'd love to get your perspective on this point and bring you back into the discussion. How is HP ensuring the health and safety of its employees, and how do you manage diversity, inclusion, and well-being amidst the pandemic?
It's a good question. I think there's going to be some similarities to the way we're handling it to the way most banks and financial services companies handle it. For example, we're currently in a hybrid model where people who are manufacturing and engineering, certain engineering roles are live in person, and HP is responsible for their health and safety as well as their families. So there's a lot of effort being put around making sure that we put those people in as little risk as possible. That's number one. The second thing, though, is assessing the risk. There's a lot of information out there, and all of us as employees can get information of, it's the situation's changing all the time. There's a lot of people talking, and it's not really necessarily clear what the right story is for us to guide our business during this time. So our ability to assess risk, make decisions, we have a very clear decision-making process. Specifically in areas like environmental health and safety and corporate real estate, in our global resilience and legal departments. So their ability to make decisions on company policy during this time is really, really critical. And we really have to hunker down to minimize the amount of noise versus the important sounds that we need to be listening to. And then, obviously we have important goals around following the advice of experts, really making sure that the information we're taking in to make our decisions to protect our employees and drive the business are 100% as guaranteed as you can be in a time of upheaval like right now. The diversity and inclusion part of what we do has never been more important, right? When you're a technology company, creativity and innovation is everything. And the minute you know that decision-making groups, people who are coming up with ideas and making creative decisions, the minute you know you can reliably depend on groupthink to ruin and stifle innovation, you're going to fall behind. So right now, diversity and inclusion, bringing a wide variety of different perspectives, a wide variety of different experiences, a wide diversity of cultural experiences and life experiences is absolutely critical. We don't want groupthink to infect what we're doing. So diversity's never been more important, especially when you have, as was mentioned earlier, I think with Patrick and Charlotte, you have a suboptimal meeting environment, right? Part of making decisions and coming up with ideas is being together, trusting in one another, and you have to have relationships to create that trust. And trust and relationships are hard to build when you're virtual all the time. So while we're all dealing with that challenge to collaboration and making decisions, we don't want to come out the wrong side on diversity and inclusion, because again, it's another strike against us in a time where we want to make all the right moves.
Yep, completely agree. Thank you for that. Right, let me move to our final question. And I'd like to really end with some practical advice to the IT leaders who are listening and viewing this webcast. So Mike, let me start with you. What advice would you give to companies looking to move more of their operations or their data into the cloud?
I would say think security first. Start with a small project or a small workload. The cloud is exciting. There's a lot of opportunities, and we've witnessed it. The pace exponentially grows, so it's very easy to create rapid results and value once you get started. But at the same time, it's costly. It's a shift of costs. We're talking about an OpEx cost versus a capital expenditure. And quite frankly, a lot of the regulators don't fully understand the cloud. So make sure you've done your risk management, make sure the compliance teams are on board, and all of your homework is done. So it's one of those, don't jump in, both feet, but do your homework and get organized.
Very good, thank you. Patrick, how do you see the banks approaching a more digital future? Is it through the cloud? And I know you look at the cloud very closely in the work that you do, or are there other approaches being investigated, or a combination of all of that?
So the cloud, I see the cloud as a mean to get more agile, to get more faster. I think one element, I see three elements which are very important for the digital transformation of the banks. And one of the elements is, of course, going faster. And that's where I call it DevSecOps, is security embedded in our development and engineering practices. But there's another element that's equally important, and that's end-of-life and lifecycle management. As long as most banks, big banks, have a huge estate of applications in a myriad of technologies, without cleaning this up, any, I would say, systemic move to the cloud will be extremely difficult. So solving that end-of-life problem by an evergreen approach, where you replace systemically your on-prem capabilities by SaaS solutions, or you implement them on container platforms, is very important. And then the third element is embedding what you could call exponential technologies in your existing engineering practice. And exponential technologies such as AI, machine learning, distributed ledger technology, augmented reality, big data. Often you hear the stories about, okay, DLT is going to replace all settlement systems in the world. I don't think that, but DLT can certainly help in making, for instance, the confirmation process of derivatives easier. And the combined usage of these, I would say, full stack technologies with exponential technologies will drive a digitization strategy. But you need all three. You need the cleanup, you need the cloud adoption, and you need the adoption of exponential technologies.
That's great, thank you. And Charlotte, let me bring you in as well in terms of looking at fintechs. And now we've seen the emergence of a lot of fintechs in the B2C space. I'm thinking about TransferWise and Monzo and Revolut and WorldRemit and a whole host of others. But do you see a role for fintechs in terms of the B2B side of things and delivering B2B solutions, perhaps some of the things that we've been talking about throughout this webcast?
Yeah, I mean, certainly, within the payments and the neo-challenger banks, that's obviously, a huge increase in B2C. But even pre-crisis, we're already seeing that being more like B2B2C solutions and then B2B solutions. And certainly some of the, biggest amount of work we do is connecting those fintechs with financial services players. I think we're going to see a huge change in insurance as well. We're really looking at insurtech and how that's going to accelerate, obviously as a result of the crisis. We certainly see the next big wave is going to be in the B2B space or B2B2C. So wealth management that Patrick talked about. You're already seeing partnerships being struck between those wealth tech firms that would have potentially gone direct, and now are quite happy to sell their solutions into a large financial institution. Said certainly, I think in the insurance space that will only accelerate. But the banks themselves, we're already on this journey, as Patrick said. This is a journey we started in the last financial crisis in 2008. We're seeing banks already, on the bus, in getting ready for that transformation. This is accelerating it. They're already going to bring their solutions in. How are they going to get there quickly? They're going to look externally of who's got the best tech, who they can partner with, who do they want to work with. And even if they don't want to partner with them, I think we're going to see the referrals. We're already seeing it in SME financing. The banks just won't be able to fulfill the demand from SMEs for SME financing because the loans they're holding on their books. Rather than turn a customer away, you partner, you refer, so you still take that initial call. And certainly, UK, US has already, accelerated this, but globally, we're already seeing that. We're seeing, financial services hubs around the world coming to fintechs in the UK, in the US, and saying, we need your solutions, we need them now. And I think that's going to really accelerate. We haven't talked much about big tech, obviously, but you look at what big tech's going to do in the payment space, and what the banks are going to need to do to keep up with that. And data, the power of data. We talked about cyber and cyber risk. You look at how much data we're collecting, how much is being used now, what that's going to do to accelerate the innovation in financial services. This isn't just about fintech now. This is the whole of financial professional services reinventing itself, transforming itself, and really seeing this as the next wave of that transformation. And it's a pretty exciting time, to be in the fintech space, I must admit. But I think we're not going backwards. We're going to go forwards, and we're going to go forwards really fast.
Yes. And actually, Charlotte, I think you're teeing up a future webcast for us, which is the role of big tech alongside fintech and financial services. I think that requires a whole new webcast to cover that topic. So we might have to bring you back into that one as well. So now, before we close this session, I'd like to bring Joe back. And as I mentioned at the start, Joe is the HP host for this webcast. So Joe, it would be great to just get some of your perspectives from the webcast and perhaps some concluding comments that we can all take away.
Sure. I tried to take some notes as we went because we did cover a lot of ground, but I think we all came out of the gate with an awareness and a recognition about the acceleration of change. I think Patrick said it best, is that these were changes that were happening anyway. They're just happening at a much faster rate now. We talked about the challenge, the embracing of automation and digitization. We talked about the challenges of security, but the opportunity that's in front of financial institutions as they move into this new normal. We talked a little bit about how do you make sure that your teams are still performing remotely, that you're making the most of virtual tools. We talked a little bit about burnout, which I think we're all experts on, trying to maintain focus, leverage the tools, make optimal decisions, even in a time that's really suboptimal for lots of reasons, especially our relationships and ability to collaborate with coworkers. And then we started talking about how do we go forward? What are the things to watch for? What are the opportunities in front of us? And what are the best first steps for us to do? I think that the world hasn't stopped changing. There's not a solid state that we can point to yet. We still don't know where, when, how that's going to look. But I think if you view it from our financial services clients' perspective, I think that the scary times, obviously, and we don't know that the die has not been finally cast on what this pandemic will look like and what its long-term effects are. But I think if you're an optimistic person, you know that banks can create a lot of innovation. I think a lot of them feel like they have a role in supporting individuals and businesses during a tough time, which is an opportunity for them to create a lot of trust, really strong relationships. And if they keep their eye on the ball, and hopefully HP can help, take advantage of great new efficiencies and great new opportunities that come out of cultural changes, environmental changes, the way people interact with their finances and with their financial services companies is going to change. And banks that have their eye on the ball as the world continues to turn are going to be able to reap great benefits and really change the game.
That's great, Joe. Thanks for that. Thanks for pulling all of those strands together. You're right, we covered a lot of ground in a short amount of time. So on behalf of HP and Global Tech Advocates, my thanks to all of our speakers, and thank you to everyone who's joined us to watch this webcast as part of the School of Thought, Managing Change in the Age of Hyperacceleration series from HP and Global Tech Advocates. Now, right after this particular portion of the webcast, there will be a follow-on Q&A session with the speakers with questions that have been provided by the Global Tech Advocates community. And the conversation doesn't end here. We will email everyone who has registered to watch the webcast and invite you to become part of our Global Tech Advocates and HP community. And we've also created a GTA and HP community LinkedIn group, and you will be invited to that group as well. So thank you very much for watching, and stay with us to join us for the brief Q&A session that follows. Welcome back to the School of Thought, Managing Change in the Age of Hyperacceleration series from HP and Global Tech Advocates. And this specific webcast, which is about the acceleration of cloud adoption in financial services. Now, before we close out, we've had some questions that were submitted by IT leaders and advocates within the Global Tech Advocates community. So I'm going to throw some very quick-fire questions at each of our speakers to give us a brief response. So Patrick, let me start with you first. What do you see as the next big area of transformation in the user experience with banks?
Yeah, so client experience. I think digitization often has been translated as unassisted banking on mobile devices. And I think that's not the future. The future is omni-channel, multiple channels that can be, and they can be used in multiple modalities, both assisted to unassisted or semi-assisted. Important on top of this is that a deep understanding of the customer. So be able to capture events, correlate these events, and get a full understanding of the customer requirements and needs. And then the third element, which I think is very important, is to focus from or refocus from transaction-oriented banking to live event. What really matters? What are the moments of truth, or the moments that matter for the customer? It's not about opening a mortgage account. It's about getting your new home, and looking at that these requirements or these wishes from the client holistically. And if you take these three things together, about the omni-channel, deep understanding via analytics and big data, plus focusing on live events, I think overall the customer experience will improve.
Thank you, Patrick. Mike, what is one lesson that financial services firms can learn from the tech sector?
One lesson. Well, I think that's a tough one. I think the reality is that the tech sector is certainly agile, and the ability to change on a dime and adapt to the times is a reality. I mean, we've all had to do it, and in this new reality, I think it's more important than ever.
Great, thank you. And Charlotte, can the fintech sector deal with the increased scrutiny it's starting to face as it envelopes more of the banking and traditional banking sector?
It's a great question. I mean, we're now seeing some of these fintech companies, we're in excess of 2, 3, 5 million customers now. And the word that everyone's talking about is operational resilience. And it's finding that balance of regulation. Yes, the UK's done a fantastic job in really setting the standards of regulatory sandboxes. But as these companies grow up, can we get the trust into customers that they start to think of these as just as trustworthy as the big financial services player that they know and love, but maybe isn't bringing the innovation in. So I think we really have to now focus on the level of regulation that's in line with the activity, not just the name of it. Just because you're a bank, you don't need to be at the same regulation maybe as something a global player. But really getting the resilience, the governance. Talk about Wirecard, and being able to instill that trust. But it's on the right journey. I think everyone within the fintech sector is wanting to see some of these players go global, and we now have to set our standards high, not so high that we stifle that innovation, but high enough that we instill trust in the very customers they're trying to serve.
Great, thanks, Charlotte. And Joe, my last question's for you. What's HP's primary offering for financial services post-pandemic?
That would assume that there was one answer to that question, and unfortunately there isn't. So in our managed services world, we are providing all sorts of devices to make remote employees more efficient, and a lot of financial institutions prefer to acquire those in a way as a service, essentially. So you have our managed print services, our device as a service for PCs and compute devices. So you've got that growing very, very quickly because, again, they want to be as flexible as possible. They want to be able to make agile, intelligent IT decisions, real estate decisions, business decisions, to pick up and move and make changes. And this accentuates that flexibility, all the managed services that we offer as far as, again, devices, essentially, endpoint devices as a service. The second thing is security. I think Mike said it best, where a lot of the, now that we've survived the first speed bump of this long journey through pandemic, financial institutions want to make sure they don't make any moves without thinking security first. And a group of infrastructure security people and data security people who are used to the old model of offices and branches and call centers, now suddenly dealing with a incredibly radically remote organization, have all sorts of new challenges, and they can use all the help that they can get, to be honest. And HP, obviously, we know our devices and our services and our software really, really well, and we have a great expertise in security. So security assessments, security services, event security management, security event management is a big part of what we do, and so those are really important to our banking clients right now. The third one is digitization. As we said, 100 times, the importance of digitization and automation can't be overstated to banks right now. In addition to just keeping the lights on and running the business, they're going to do more. They want to continue digitizing, not just to make it so that they can survive the pandemics, but they can actually get the full advantage that digitization offers as far as cost and competitiveness and speed and agility. So we spend a lot of time with our clients assessing existing workflows, accessing existing locations, and finding out how can we make things run more quickly, smoothly, implement e-signature and electronic records management, and improve their ability to automate. Let them understand their processes better through analytics, and be able to help them reach the digitization goals that they have as an organization. Never been more important to our banking clients, and that's where we're spending a lot of our time.
That's great. Thanks for that, Joe. And that concludes this webcast in the series School of Thought, Managing Change in the Age of Hyper-Acceleration. Again, my thanks to all of the speakers. And this series concludes from HP and Global Tech Advocates, and we'll see you on our next webcast. Thanks for watching.
Thank you for watching. If you wish to continue the conversation as a part of the HP and Global Tech Advocates LinkedIn community, visit hp.com/HP School of Thought, as seen on screen, and click Join Now.